Good afternoon, everyone, and welcome to the Market Close Report for Friday, the 17th of July. Well, the Aussie market did drop back a bit today in what was another choppy session. The ASX 200 down by 44 points or 0.5% to 8,796. So it did actually lift from the lows of the day. It has been quite an unusual week for markets. We finished completely flat 3 of the past 5 days, which is something that doesn't occur very often at all. In fact, you've got to go back to Christmas and the first week of January to see that type of movement, and volumes have been particularly light this week as well, and school holidays are probably contributing to that. So we've actually had roughly 20 to 25% less money flowing through the Australian share market than what the average has been over the past 3 months. And that, I guess, just does show a bit of hesitancy in markets at the moment. Not overly surprising. I think markets are still a little cautious at the moment. We had some disappointing data out of China yesterday on economic growth. Also in recent days, we had updates on inflation in the US, which was well received because it does just basically reduce the likelihood of any rate hikes in America in coming months. But actually, adding to this, of course, there's no end in sight for the conflict in the Middle East, and that is keeping markets on edge. But also in the months ahead, we're going to get a lot of profit results from not only US companies, where the earnings season has already started, but also the Australian profit reporting season in August. So there are a lot of questions still out there that remain unanswered. As far as what we saw across the sectors today, though, there were 4 sectors that dropped back, none falling more rather than the materials. So those miners were down almost 3% today. That was a pretty big weight, and losses across the board from gold miners to also the big iron ore players as well. We had a tech sector, which is a small part of our market, about 2% of the ASX, down 1.6%, and then some modest declines from healthcare and financials, which were quite mixed today. In the winners column, we had the utilities. We also had consumer staples stock, communication services, so some of those defensive areas of the market. But then we also had energy stocks managing to lift quite strongly by 1.7% as oil prices still remain quite well supported. Now, if we look at the winners of the day, AMP was top of the list, actually the best performer for a second straight day, which doesn't happen all that often. So 6.3% higher. It's actually 10% higher just this year as well. 2 brokers raised their share price targets on the stock today, and this followed yesterday's earnings upgrade, where it basically became more optimistic with its profit goals. Amcor was also up around 2.8% today. The global packaging company received some broker upgrades as well in prior days. Coles up in the order of 2.9%. So it's decided to stop takeover talks with Green Cross Pet Wellness Company. Now, this is the owner of not only Green Cross Vets, but also Pet Barn. Now, they made the announcement a very short while ago that they were in talks to potentially buy this organization, actually about 2 weeks ago or so. And today the announcement was very short, saying that they've ended these talks. Just a 50-word statement today as well. And Woodside up in the order of 3.2%, standing out amongst its energy peers today. Now, oil prices not doing that much over the past 24 hours, but we still had oil prices lifting about 10% this week and about 40% higher since the start of this year. Now, there was a broker report today suggesting that Aussie-listed energy producers like Woodside could potentially be takeover targets, and at the same time, this broker raised its share price target for the next 12 months and also upgraded its outlook on the company as well. So Woodside was up, and Santos and others also managed to lift today. Now, there were still a number of losers, as there often are. We had Zipco, the buy now, pay later company, down a little more than 5%. Now it's decided to commence, in its own words, an orderly wind down of its New Zealand operations. So in English, it means that after a review, they've decided to basically stop doing business there eventually. They want to focus instead on Australia and US operations, which is where they make a lot of their money. 4D Medical was down 15.5% today. It's on a 4-day losing streak as well, and it was in a trading halt yesterday. Now, there was news that a bill was introduced in the US House of Representatives to establish a pilot program using 4D lung imaging software to identify respiratory disorders and lung disease in veterans. Now, the tech is that it was flagged here is in a category that 4D Medical is a global leader in, but the shares still fell quite heavily today. But we've got to keep in mind that last year it rose 700%. So it went from 48.5 cents per share to $3.93 in 12 months, and it's no stranger danger to aggressive moves in both directions on the market. We had BHP Group down 2.7%, had a rough couple of days, but a very strong Wednesday. Now it's been hit by strike action in the Pilbara in recent days, threat of more industrial action, and yesterday in an update to the market, it basically warned that copper production could fall by as much as 15% next year, and copper these days are its biggest earner. And then Regis Resources, the gold miner, down almost 9%. It upgraded its production outlook for 2027, but it seemed to disappoint the market. But again, this is a stock that is down 25% this year, but did triple on the market in 2025. Now, looking forward from here, next week there'll be plenty to watch. The weekend has been, in recent weeks, has basically been a time where there have been surprising announcements coming out of the Middle East. So we'll see if that takes place, but that could set the tone for what happens in markets on Monday when we come back online. Also, the US earnings season ramps up. The two big stocks to watch in the US next week will be Tesla and also Alphabet, Google's parent company, but there'll be a number of others doing the same. And then on Thursday, we're going to get the official jobs data out for the prior month. This is when we find out the number of jobs added or lost, how many of those were full and part-time, and what the unemployment rate's sitting at. And this is an important input into the Reserve Bank's thinking around interest rates as well. Now, as far as currencies go, we've got the Aussie dollar a little softer against most. It's sitting at 69.8 US. Did actually crack 70 US over the past 24 hours, though. Fell a touch as well against the euro and also the Japanese yen. On that note, hope you had a great week, everyone. Enjoy the weekend. We look forward to seeing you on Monday.